All right, guys. Good morning. Happy Monday. It's our first pre-market Monday we're doing on Discord, so hopefully this works pretty good. So I want to make sure, Evan, you can see my screen, right?
Yep.
Okay, cool. All right. So we got the 10-year again continuing this run up back towards the retest of its prior high for this year. As we said the last couple of weeks, we should expect to see some type of retest, some little push through this high. And that should be in the short term when we should expect some type of bottom out of the equities market. Again, right now, the last week or the end of last week, we had this amazing run up, this nice 3-day run up in the broad indexes in most major markets, but most are very extended in the short term. And most are kind of running into like this mini resistance area, kind of dead smack in the middle of the major markets or particular sectors range that they've been trading in. So we don't really want to be going crazy buying, today, which would be fourth day up. Yes, could we continue to push higher? Of course, but chasing fourth day up in anything is typically not the wisest move. We want to wait for those pull-ins and see if this 390 is going to hold. And for right now, again, 430 obviously is the clear resistance, which eventually in time will more than likely be breaking through as 430 as we work our way back towards this all-time high. But there's still, we can just as easily still retest this low, shake this low before this 430 is going to really break and just run to 480. Some of the sectors that are still in play, again, a lot of the energy names have still been, the names to look at. Again, for now, the real pivot is this like 108 kind of support in the energy sector. And for now, kind of like 114 is a little area that we can look to buy above. Kevin, I think we can mute those little dinging sounds.
I don't think so. Not here.
All right, not biggie. Again, otherwise, some of your sectors, again, telecom continues to base. We can see this very obvious breakdown stage. We can see the base that's been forming since kind of late June, and eventually up this 96 through 100. These will be kind of some spots to add to this weakest sector as it eventually works its way back towards those highs. Utilities is the first sector that is retesting or testing 52-week highs amongst the rest of the sectors. Again, this is not the time we want to be buying this retest. We want to let this develop, let this flag, and eventually, months down the line, we can look to add to this sector. Again, a lot of the rest are all very similar. These big 3-day run-ups, IBB with this major base breakout that's forming, but again, very hard to chase up here when down here was kind of support. And that's the overall theme with a lot of these sectors. This third day up big, you can't be looking to put a crazy amount of risk on here. Even for NASDAQ, looks phenomenal, but this is really just like a mini retest here, and we need to see this to develop a little bit more. Staples, again, another base that's forming pretty nicely, but same thing. Still too soon into this run up, and we need to just give it all these sectors some time to really set up. Moving on to a couple stocks that I'm keeping an eye on. We got this Cisco. Fade of this earnings move. It's back under this kind of like gap fill area in this 46. And tight risk here versus 44, only $2 risk here. So one to keep an eye on, but same thing. Not looking to buy fourth day up today or tomorrow, but if it continues to hold and flag in this range in a week or 2 weeks or a month, be willing to definitely put some risk on it. Again, very lower beta tech name that you can probably a little bit heavier on tighter risk, just given the way that this name does typically trade. Netflix, again, been setting up for almost 2 quarters now into this gap fill. We see these higher pivot lows. It was holding this 160 for the longest time. Now we can see kind of 210 is the area. So up through 240 in this Netflix. Again, big breakdown stage. You can see this very clear base that's been forming for a couple months now. All good signs for Netflix. And eventually we can be ready for that 240 breakout. T-Mobile, again, we're talking about telecom. Telecom being one of the weakest sectors this year, biggest laggard, but T-Mobile in that sector being one of the strongest names, even in, outside of that sector, it's near 52-week highs. It's retesting this prior all-time high. It's flagging here pretty nicely onto this, 140 level. So this 150 breakout in time probably is going to wait, I would imagine, until after earnings, but definitely want to keep on the radar. And last is UPS, name I've been in for quite a bit. We put a swing on up through 190 in the beginning of or the end of July, I should say. And for now, we can see 190 has been holding as support here. And now we have this little 200 area that we can add to. But again, not looking to chase today, Monday morning. But if this continues to hold out in this range, this would be kind of the next area to add to, in a week or so. So those are, the few names I'm looking at and the for market outlook. Having if there's any ideas you want to go over, some member ideas.
Yeah, the new ideas, to show you a few names, they look all pretty good. First one is for RA. I believe on the shakedown as well. We were at 98 level.
Looks good. Okay. Yeah, I mean, the main thing here again, might need to tighten up a little bit. Maybe has to shake out this little low here, but yeah, definitely Thursday night, it looks very good.
Mm-hmm. Next one is UTHR through 225.
Yeah, to 225 to 26.
Mm-hmm.
First up.
We looked at it at like 4 days, so it looks like pretty solid inflection point. I like this one a lot, actually.
Yeah, super tight risk here. Definitely with you on that one. Definitely worth throwing an order in.
Next one is going to GFS through 6250.
Oops. GFS 6250.
It's over that over Thursday, Friday high.
Yeah, I mean, recent IPO.
Mm-hmm.
Semiconductor, we can definitely see that, this 62 half definitely has been a spot in this name for some time, even the 65, but both look like areas that you can definitely look to put some risk on. Probably has to pull a little.
Because it's like the out is probably like 55 or 56, which makes it a little wide. But I would almost want it to put in a higher low again, at a higher pivot level around that 58, 60 area would be really make it right up.
Yeah. Just given these last 2 days where it's running up here and it's just kind of fading, I would expect it to kind of pull in a little bit. And again, even with these recent IPOs, like as much as we have to respect this out, these IPOs a lot of times it's like they're going to smoke that out anyways in the short term. Where again through this 62 half through 65 looks good. But I wouldn't be banking on it going first thing tomorrow this morning. So it might be a good thing for us. And
yeah,
we can catch up.
Next one is AXSM to 63.
AXSM.
Yeah. Some therapeutic.
Okay. Yes, we were trying to trade this for a little wedge. It was 2 years ago. Let's see. He said, what, up to 63?
Yeah, 63.
I mean, this definitely is not my cup of tea, but definitely see what he's looking at there.
Mm-hmm.
I would just probably wait for it to develop a little, but I mean, I see it.
It's a low cheat entry, I think it's happened. But I have intermediate stuff, and like this is without a low cheat entry after a light volume pullback. If you look at the volume, you can actually see like it dried up immensely. We had that big move on August 19th, massive volume, 20 million in volume, and then ever since then it's just slowed down to like between 2 and 1.5 million. So that was really dried up. Kind of a lot of people have lost their attention on it, which is usually the time that they start to slow. So I'm definitely keeping an eye on this one as well. It's been a lot.
Yeah.
Next one is SLNC. SLNC. There you go. 1960.
All right, so I hate these cheap names. I mean, this is a pass me. I just don't like these cheap names. It's just not worth. Buy 1950 versus 18, you're giving it 10%, and it's going to go nowhere. So this for me is a big pass. And just yeah, exactly. It's like buy this into 40, it's going to go to 80, and it'll get there in 2 years, and buy it then. This for here is a big pass for me.
I'm with you there. I'm going to the next, so here is the three favorites, so it's AIV to 166. We actually went over this one last night with Shake. We did a shakedown, breakdown. We went over with AIV. Mentioned it's sort of in the middle of this descending trend, which makes it kind of tough to buy. Especially a couple of days ago, looks like sellers can win. Seems like it needs a little bit more time, is what Shake was saying, which I agree. But the real sideways here, I think if it turns that, stage one consolidation, I think they're looking at a good time.
Yeah. Yeah, definitely. Yeah, still in that breakdown stage. Yeah, I'm with it as well.
Yeah.
We need to rush it.
Yeah. Next one is 202.50.
I like this one a lot more. Yeah. So this was in that breakdown stage, which was way more aggressive. And it's left that breakdown stage. It started to base, and now it's really, I guess, his base is really this 210 versus like 190. This is like the real spot, and you can definitely try to find those tighter ones, but you just have to be aware that when you're buying inside of these bases, they're going to hang out here way longer than we want them to be. So you have to be kicking into 210. Like you have to really be trading the range here. This isn't like when you're trading inside of the real base. You got to play the range. You can't be building into for the break, because that break may take another year or 6 months or however long it's going to be. So if you are buying this 202, 203, you got to be kicking into 210 and being able to kind of continue to add back on those pull-ins and have enough that you're not hoping and praying that the time you get in, it's going to be the time it's going to break the base.
Yeah. Next one you're doing is NOC to 396. We've been staring at this thing out here. It's been known to be on this thing to break out, but it's getting better and better.
Yeah, I mean, this is definitely, couldn't be more A plus. The fact that I won't say more A plus, but the fact that it continues to kind of flirt through this little area, this prior high, definitely a good sign. It seems like really just waiting for 500 probably is going to be just the easier thing than trying to like buy 497 or 498 and then 500 matches become resistance. But yeah, again, top right, very strong name. Yeah, all good signs.
Yeah. Chris is looking at 2 days, is looking at 2 levels, 2 in the US. Through 138.
Yeah. Again, this is exactly what I want to see back towards these highs, super tight flag, 148, 150, both spots to add through, on some pretty tight risk. Again, telecom has been the weakest sector this year. T-Mobile obviously does not care. The big thing with T-Mobile compared to, say, the Verizons or the AT&Ts of the world, the big difference between T-Mobile and these two, T-Mobile, AT&T, and Verizon, the big three, T-Mobile and Verizon have a huge dividend yield where T-Mobile doesn't. I don't even know if they have a dividend for T-Mobile, or if they do, yeah, they don't. So with Verizon and T-Mobile, 5% of the stock is getting kind of whacked every year from the dividend. So that's going to always like kind of drag the stock down. And that's why we try to say don't chase yield. It's more like the REIT space. That's one of those reasons why. So T-Mobile as a stock has performed so much better than Verizon and T-Mobile. And one of those reasons is they don't pay dividends. So there's none of those times when the stock is just going to get smoked. Not smoked, but the stock's not getting those 1% gap downs a quarter for the, when it's going ex dividend on the X date. So that's just a little side note on, why we try to not chase a yield with some of these stocks, but this T-Mobile looks very good.
Yeah. So we just got in, he just said, like, he shakes words and I thought, what respect T-Mobile. I'm not expecting any explosive news out of that name, but again, if you need to get slow down your career and the profits remain presiding in the right places, but just don't expect some, like, 20% breakout move from T-Mobile, because they're just, it's not like they're doing anything super innovative, at least for now. Maybe they got something, maybe Chris knows something, I don't know.
I mean, they're up 50% this year, so they're not. It's not like Verizon's down this year 25%. T-Mobile's down not the same.
AT&T's down, yeah.
And T-Mobile up 50%. So again, I was a Sprint user forever, and I'm T-Mobile now. I think they're very good. But again, it's nothing. There's something like what you're saying, nothing sexy that T-Mobile's going to be doing. It just doesn't bring on new users. But their stock being different from the other two, it's that they don't pay a dividend, and that's one of the reasons why their stock will. We got to mute, I think. Okay, there we go. But anyway, so we can continue. Any other things?
Yeah, we got to looking at MCK to 372 and 375.
So I feel like we were talking about MCK like a couple weeks ago, and it was just like waiting to buy through this high, which is I don't think you need to really like sneak in 372 when this prior is 375. Like just wait for the retest, wait for it to develop more. There's no sense of kind of like running in here $2 before the retest. Just let it like just. I think last time someone brought up that we just use examples. Like it took, a few months before this breakout really was ready. Same thing here. Again, it's at all-time highs. The path of least resistance is probably higher, but it's clearly just flagging here. Just buy through the high. When it's ready.
Yeah. I hear that. Yeah, a couple more tests around resistance would be ideal. So like that green circle, right? Green circle out. It looks like it needs to kind of make that same sort of setup again. Everything there. Now, if anybody that's listening right now has anything they want to go over the questions or check a little bit, we went over a few yesterday, but anyone wants to go over anything? Give me a second. The two that I was looking at that I mentioned with shape, first one was DG, Dollar General. Kind of needs a little bit of side into it, but I like the pivot that I made, and just want to see that tighten up under like 250 area. I think it's pretty good.
Yeah, that 250, that's 260 in time. Both look.
Yeah,
this 260 in time looks phenomenal. This is like.
Yeah, definitely. And then the other one is DUK, Duke Energy. We got 111. Just that little momentum flag that it's making. Had a big move on Wednesday, consolidated Thursday, Friday. Sitting above all the moving averages right now. Looks pretty good. So move back up to that, 114 resistance. And then I would look to probably get some profits in the area and then keep a little piece as it tries to, battle out that resistance area. If it goes anywhere, have a little piece. If it consolidates, it'll give me another opportunity to buy some more.
Yeah. I like it. I like it a lot. Yeah.
I would say he's not looking to do much with his gap up at watching ACHC to 84.5.
So again, I think Cushion might have mentioned this one here. Someone.
He actually, I mentioned that one. He might have mentioned that, but he both did. But yeah, so that's what I had in March on mine as well. We were looking at for 71. But yeah, trying to find again if here. It's pretty good in time. I that side. Okay.
Yeah, let's see.
The other one that I really liked was this kind of TLST.
Yeah, big
macro level there.
Yeah, looks really good. I'm sorry, what was the last one?
TLST, right?
TLST.
390. That's a weekly chart for the day.
Okay.
That's right. Good. Typing, see what we got.
Yeah, I mean, this honestly is as excited as the market is in the short term. There's definitely some setups out there.
Yeah, absolutely. I was looking at CAH to 72.
Yeah, I mean, I definitely think that post probably a little bit tighter, but again, the CH is definitely all-time highs. Yeah. Okay. I mean, it still looks good. Probably needs a little bit of time, just given, that explosive move off of earnings. This again, like think Disney. This day, I forget who it was at that point. wanted to buy this 125. It was like, let's just give it some time, let it develop, baited the whole move, which, isn't too surprising, all these gap ups. So I think that same thing with, I'm sorry, and what was the name again?
It was CAH.
CAH. With CAH, it like just, had this big explosive move. It is holding this gap up. It's holding this earnings move up. Let's just give it some time to continue to flag out in this range. And then when, in time, of course, your 70 looks phenomenal, but I don't think it's going to just go tomorrow or this week. It's probably going to hang out here for a little bit. But definitely want to keep on the radar.
Yep. And that's all we got for now. Oh, no, we got 2 more. We're going to TLVI 66.
Oil name. I mean, it's just tough here because you're buying, this will be third day up versus 60. That's like the real out, 58. It's a lot of risk. And your best case, you're probably going to get a move to this like 71. And you're kind of at 1-to-1 here. So, you might need to let this develop. Like there's very rarely a time that if a stock's up 6% the day before that I want to get involved the next day. You got to just wait for, you got to be kind of involved that day, not chasing after the 6% day.
Yeah. Looking at also expecting a bunch of them now. CICK, ready to start to tighten up, but let's go through 55.
Yeah, nice little flag for me. Again, but this has got to, this seems like a, support buyback candidate. Like this, this is a big range. It's really hard to be buying 55 and giving it versus this 48, which in 2-3 days it's making these types of moves that it's got to be these alerts set down here in these 51 area, 50 area, and finding that entry where you're risking $1 or $2 versus risking 4 to 6 at the top end of the range.
Yeah. Then we're going to have BCP through 39.
This actually looks really good. Is this looks like, so this is a huge base going back many years. This might be an MLP, which makes it something you want to. I'll have to look at this more, but with MLPs, you get like a separate tax filing at the end of the year. And if it's a swing trade, it's almost not worth the tax form. I have to double check though if this is MLP. But chart wise, again, if it is an MLP and you already get the tax form, you really want to have some conviction in the name and be willing to actually hold it because you're going to spend at least $100 on that tax filing. So you want to take that into consideration. But again, through 40, that looks phenomenal. But just again, huge base. It's been set up for quite some time. So
The next one is going to be ED 102.
Con Ed. Again, utilities, first sector hitting all-time highs. Probably not the best thing that we want to hear, being that's the most risk-off sector, but is what it is. But yeah, ED looks great. When utilities do push through highs, ED is obviously like the Apple of the utility sector, so they're more likely to be the first to go. And obviously, their stock after 2-week highs, it's not too surprising. So definitely put them on that one. This is like the same thing like a Cisco, like a T-Mobile. These are going to be these lower beta breakouts. They're going to be more of a grinder. This is not going to be up 10% in a week or 5% in a day. Same thing with T-Mobile. So you have to just be aware of that. So these are names that you can probably be a little bit heavier than you would normally, and just have much tighter risk, because if it doesn't go, it's probably not going to go, by giving it time or room.
Yeah, Dave mentioned GFS 62, another GFS, that would commute a little bit more time. Actually, 40 up and then, big rates for the top side, but since I was pretty active there, so I need to time up a little bit. And then Alex asked, what's the MLP?
MLP is a massive limited partnership. I don't know why I typed MLP as a ticker.
I think it's MLP, N as in Nancy.
NLP? I have no idea. I don't know what that means.
I don't know if he's asking, he said regarding DCP, what is an NLP?
So MLP is a master limited partnership. It's very common in the energy space. It's very common in oil and pipeline companies. It's just it's a weird tax structure that they set up. Oftentimes these companies pay insane dividends. Right now it's not, but let's go back to like pre-financial crisis to give you kind of a better example. So again, and they're very energy related. So right now the dividend's 40 cents, 2016, okay, 80. Let's go back a little more. 50 cents. Okay, so maybe this isn't the best example. But okay, so example, the MLP space, there was MLPs during the financial crisis that were paying out $2, $3 a quarter. And that's why we say don't chase yield, because when you're paying out $3 a quarter, the stock's going to gap down 5%. But if you can continue to get 25% a year of the dividend and the stock kind of gets beat up but doesn't go to zero, you kind of make out. But it's just a weird tax structure. Like this is a limited partnership. This is an LP. So it's just a weird tax structure with these names, but it's very common in the oil and gas pipeline industry. And you just have to know that when you do buy these names, like the day you buy them, at the end of the year, you're going to get a separate tax form from them. And it's not this like elaborate thing to file, but it needs to go on your tax return, and it's just an additional piece of paper that you have to give to your tax preparer. So if it's like a swing trade, like you're looking at buy 40 versus 38, and you're going to hold it for 3 days, I would say don't waste your time, because you're going to get the tax form and you're going to probably spend $100, let this guy add to your return. Where if you really like DCP and you're like, I'm probably going to hold this thing for the year and I want to wait for this base to break and I'm going to hold it till 60 and I'm going to collect the 4 to 4.5% dividend yield, then go for it. But if it's a swing trade and you see anything with LP, anything with MLP in it, especially in the oil and gas pipeline industry, it's often just going to be a pass from a swing trading standpoint. And I'll do like a lesson on this to do more detail. So I can show some examples of like stocks that paid 20% a year dividends and then went to $1 and they still kept the dividend going. But I don't have them off the top of my head right now.
Gotcha. Well, I think that is everything. Market over in 3 minutes. And good to go.
All right, guys. See you guys in the chat. Hope you guys had fun in the first Discord pre-market Monday meeting.
Yeah. All
right, guys.
right.